See this table. I think this slide is the most important slide of the whole presentation I have prepared. So please pay full attention here. This table will help you prepare journal entries and help you understand journal entries. Don't mug up anything, just try to understand. See, what all accounts can I have? In a business, either I will have an asset account, a liabilities account, capital account, and revenue or an income account, or an expense or an loss account. 5 types of accounts: assets, liabilities, capital, revenue, and expenses. Now only 2 things can happen. Either it can be debited or it can be credited. Now let's understand what needs to be debited and what needs to be credited. An asset, when increases in our business, we need to debit it. Because asset is something which helps us in running our business. Examples of assets, let's take some examples. Land. Land is an asset. When it comes into the business or when land is increasing, simply debit the land account. Building, another asset. Okay, building is another asset. When it comes in or when it increases, debit the account. Okay, then investments, again assets. See, investment can be of 2 types: short-term investments and long-term investments. The investments over 12 months, that is one financial period, one accounting period, comprises of normally 12 months. So the investment over 12 months will be a fixed asset, and investments below 12 months will be a current asset. But both are assets, and when they increase, we have to debit them. Okay, next, debtors. Who are debtors? The persons to whom I have sold goods on credit and now I have to receive money from them are my debtors. So I have to receive something from them, good for my business, so it is an asset. They will have a debit balance. Debtors are my current assets. Motor vehicle. Asset for the business. Furniture. Assets for the business. Then stock, the closing stock. Asset for my business, because when I will sell the stock, I will get cash balance. Then goodwill. Goodwill is the name that you earn over a period. Can you touch goodwill? Can you touch goodwill of a Reliance company or of Tata company? No. The things, see, you can touch land, you can touch building, you can touch motor vehicle, furniture, stock, these all you can touch. So these are tangible assets, but goodwill you can't touch, although it may be of great value to some organizations which they have earned over a long period, but you cannot touch them. The asset which has a value but you can't touch them, it doesn't have a physical existence, that is called as intangible asset. So goodwill is also an asset. Accrued income. Income which you will get in future in form of cash or check, accrued income, is also an asset. So all these things when increase, you have to just debit them. Land coming into the business, land account debit. Okay, furniture coming into the business, furniture account debit. In goodwill coming in, goodwill account debit. You have to follow a simple rule. and vice versa. When it decreases, you have to just credit them. See, if you put depreciation on furniture, means you are reducing the value of furniture. So what you have to do, pass a simple entry in which you have to credit the furniture account, because due to depreciation the balance decreases. Okay, now let's talk about the expenses, which have the same rule of what assets have. When the expenses or the losses increase, when the expenses or the losses increase, you have to debit them, and when the expenses or the losses decrease, you have to credit them. Let's talk about expenses. What all things can be my expenses? Purchase. When I purchase the goods, I have to debit it. Purchase always has a debit balance. You have to always debit purchase, because by purchase you raise an expense. So purchase account has always to be debited. Then whatever expense you do for running a business, I pay salary, I pay rent, I have freight, I pay wages, printing and stationery, carriage inward, carriage outward, all the carriages inward or outward, these all are my expenses, and debit them as they occur. See, these are related to cash. Somewhere depreciation is a non-cash item, but it is also an expense for the business. So whenever there is depreciation, just debit the balance. Repairs, printing and stationery, apply the same rule as you apply in assets account. Debit when it increases, credit when it decreases. Debit when your expenses or losses increases, credit when they decrease. Okay, now coming with these middle three accounts which have the same balance. Liabilities, you credit your liabilities when they increase, you debit your liabilities when they decrease. It is opposite to what you see in assets. Same here, capital account. When the capital account increases, please pay notice here, because this entry will come again and again in questions. When the capital account is increasing, you bring capital in your business. What do you do with it? You have to credit it. Okay, and when capital is going out of the business, that is decrease in capital, you have to debit it. Same way, when revenue is generated, when a revenue increases, you have to credit it, and when revenue decreases, you have to debit it. For capital, I can say it is your capital, or for companies, it is shareholders fund. So whenever some capital is coming into the business, coming in, increasing, just credit it. Okay, now the liabilities. What all can be the liabilities for my business? What are liabilities which I have to pay sooner or later to outsiders? Is the liabilities of my business. For example, see, bank account is an asset. I had to write here cash and bank, both are my assets. But then bank overdraft means you don't have that much money and you are withdrawing more money than what you have from bank is in bank overdraft. So sooner or later you will have to pay it to the bank people. So bank overdraft is a liability to your business. Then in front of debtors you have creditors, from whom you have purchased on credit. At the time of purchase, you did not make them the payment. So afterwards, you need to pay them. So there is a liability arising to pay them. So creditors have a credit balance. Okay. Bills payable. Bills payable is a liability. Same way, bills receivable will be an asset. Okay, advance income is in liability. Is in liability because I had to receive it in future coming months, but I received it now only. So it is a liability. In future, it will be compensated with my income at that time. Outstanding expense. Again, my liability. What is outstanding expense? The expense which have been incurred but have not been paid yet is an outstanding expense. For example, wages of a worker are due. He worked for us for the month but we did not pay him. So an outstanding wages account will come here, which is my liability. Okay. Now revenue. How do I generate revenue? The most important thing from which I generate revenue is my sales. See, purchase account on increasing it has to be debited, but sales account on increasing has to be credited always. So it can be sales of goods, it can be sales of services, anything. Other modes of revenue, interest received, see, when you pay interest to outsiders, it is an expense. When you receive it, it is an income. You may receive interest from bank because you deposit money with the bank, interest received, or from an outsider, discount received. Discount received. See, discount given is an expense, so discount received is an income to the business. So all these three accounts, the liabilities, the capital and the revenue, when they increase you have to debit it, and when they increase it you have to credit it, and when they decrease you have to debit it. So this, I call this a golden palette, and sooner or later this will be in your mind and then you can pass the entries.